Profit does not matter if you run out of cash. And that seems so counterintuitive, right? If it's like, what if I have this big profit number shouldn't I have a lot of cash then? Like that's what seems intuitive of I've got this profit number and my CPA told me this, or I'm looking at my profit and loss and at the bottom line on the net profit line. And it's like, it says 100,000 or 200,000 or $1 million, like however big your business is. And you're like, but I have $5 in my bank account. What's the disconnect there? There's a big difference between profit and cash. Cash is what the actual fuel for your business, but it's really the cash that you collect from the customers or from the clients or from the sales that you're doing. And we have to have a system to manage the cash so the cash can either reflect the profit or be greater than what the profit is. Because profit on a profit and loss, like if you have the financial statements, the three foundational financial statements, you've got the profit and loss, you've got the balance sheet, and you've got the cash flow statement. Well, if you're looking at the profit and loss, most business owners have seen a profit and loss before, and that very bottom number on the profit and loss is called the net profit, and that's where people just always look, like, what was my net profit for last month, or what was it for last year? And this is where they can look at that, but then open up their bank account and have it on this other screen, and then they say, but there's no way. I have a lot less money in the bank account than I do the profit that is showing on this profit and loss. And the biggest difference is your cash does not reflect your profit, because a lot of people, depending on your business, use that cash for things that sit on that balance sheet. They sit on another financial statement. And I don't want to bore you with like assets, liabilities, going into all that. I don't have fancy pictures or a little, thing behind me like to draw on or anything like that. But the balance sheet shows you this is where the cash has gone or where your cash is sitting. And then the cash flow statement is showing you how the cash moves. The cash flow statement shows how the cash moves through the business. But all that doesn't mean anything to you. All you care about is how much cash do I have, what's it earmarked for, and why is it not lining up with the profit that I'm shown on the profit and loss? So how do we figure those two things out? Number one, if your cash is wildly different than your profit, then we probably don't have a good system to track the cash. And there's lots of cash flow systems out there. I am very partial to the Profit First cash flow management system, which literally deals with bank accounts and naming them to be able to say, here's where all my money is flowing and going, and here's what it's earmarked for. You're literally naming every dollar that comes through your financial system. So you make a sale, and then from that sale, you've got bank accounts, and they're tied to different names. Like I like to have the Profit First set of bank accounts, which is profit, owner's compensation, owner's tax, income, and OPEX, operational expenses. What does that mean? Or like, what are those bank accounts for? They're to earmark every dollar that comes into your business and give them a name to make sure you understand that if I make a sale and that sale comes in, I tell the money where to go. And now if you have profit on a profit and loss on some financial statement on that bottom line, that bottom line, now you can see, does that match up with the money that's in my account? And if not, now you can at least see where the money's going. Because a lot of people confuse profit and cash, but if you are a business owner, especially if you work in an industry that has a lot of inventory, whether that be, like restaurants, or whether that be, real estate and fixing and flipping, because when you're fixing that property up, you might get a cash influx in from a private lender. But if you're doing your own lending on your own deals and you're using your own cash, it's like, even though you'll get a good return when that property is done, you're putting all that cash out there, even if you had a 6-figure month last month. But if you use all those reserves and all the 6-figure profit to be able to go out and do that next deal, well, then guess what? Your cash is going to wildly be different than the profit on the bottom line that's showing on the profit and loss. So that's where people can get confused. It's like you're using the dollars that came in and from the profit, and you're using it for the next deal or for the next marketing campaign or to hire someone. And it's like, okay, but where is that on the profit and loss? So some of those things actually sit on the profit and loss. Like if you pay someone on payroll, that will sit on the profit and loss of the income statement. But then if you are, let's say you're in real estate and you buy a property, that's not going to show up on the income statement. It's going to show up on the balance sheet. So you're like, hey, I've spent all this money getting this deal and purchasing it and then putting money into it for the repairs and all that. But then you're like, but why is it not reflecting on the profit and loss? It still shows us that it's like we didn't even buy this property. Well, that's because it sits somewhere else. So if you can understand that those financial statements interact with each other, that's where you could do a deep dive and learn that. Or if you have someone on your team like a fractional CFO, they can actually teach you the difference between profit and loss, balance sheet, and how you can utilize them. Because honestly, the balance sheet is even the most important statement, I would say. So that way you can really see, what are you building? Are you building a true business that has actual assets in there, and that you're building your cash and your cash balances, versus just the profit and loss that's kind of like the scoreboard of like, how am I doing today? But that doesn't necessarily tell you how you're doing for the long term like the balance sheet does. So there's a big difference between cash in a bank account and the net bottom line profit, where a system for cash would be like profit first and telling every single dollar where to go, telling your money where to go, and naming every dollar, versus the profit and loss is more of a bookkeeping, financial tracking, knowing that where should an expense sit on, should it sit on the income statement and the P&L, or should it sit on the balance sheet? This is where a good bookkeeper comes into play that actually knows their stuff and is worth their salt. Like, I want you to have someone who understands where to put that thing, to put the transactions, so that way you can actually analyze the business and the numbers. But if you're confused between cash and between profitability, cash, what's in your bank account, can be controlled by cash flow management systems, so you know what every dollar is earmarked for. But rarely will the cash in your bank account match the profit on the bottom line, because the profit is just like that snapshot. How did I do last month, or how did I do last year? Where your cash is constantly in motion. But then if you have reserve accounts, it can at least be easier to find, like, how much do I actually have that isn't earmarked like for reinvestment, or what is actually mine for profit or for paying myself, or to be able to have an actual reserve for my business. Those are the biggest differences between cash and between the bottom line profit, and why you need systems for both. You need a system like bookkeeping to be able to know what your profit is, but you also need a system like Profit First for your cash to know what the cash in your account is earmarked for, because rarely do those two match up of, yeah, my net profit looks like this, so that way my cash looks like my net profit over here. They're wildly different, and the way that they're just, one's a snapshot in time, the other one is more of like constantly in motion. The cash is constantly in motion. Having a system like Profit First can give you more of that clarity to be able to get where you really want to go and being able to pay yourself. And that way, okay, if I take care of my cash, usually the profit and loss will also take care of itself. Like, if you can control your cash, usually your net profit looks pretty good as well too. So that's where I just tell people, like, really control this cash. And then over here on the net profit, just make sure that you're trending in the right direction. Because sometimes people even try and make less money on the profit and loss. Like, if you're in real estate and you could take depreciation and all of that, you're trying to get your tax liability and the profit number down as much as possible. But if your cash is good, then great. What sucks is the opposite. Like, if you're like, my profit looks good, but my cash looks horrible, and then you're going out of business. And that's what happens in a lot of industries like fix and flipping, where they have a lot of their own money out in the flips, even if they've been doing good on the profit side. I had one guy who had a call with me. He had 20 projects where I think 16 of them were on the market. 4 of them were still in process in the projects. And he's like, I have like $2 million worth of profit waiting to close, but these 4 are literally killing me on my cash flow, and I'm considering bankruptcy and just turning it all in. I'm like, what? You have several 7 figures waiting to close, but you might be considering bankruptcy just because these 4 properties are sucking so much cash out of your business. And it's like, people run into that all the time on smaller scales, on larger scales. The bigger you get, the harder it is to manage that cash flow. But that's why you need to know, where's the cash, what's the bottom line, and why aren't they the same? The bottom line is the cash. The cash is everything that's in your bank account and it's constantly flowing. The net profit is more of a snapshot in time, whether it was last month, last week, yesterday, last year. It's like, where were we in the business here, and how healthy were we from the cash that we collected as income minus all the expenses to give us our bottom line. Then managing the profitability from the cash perspective through a system like Profit First is going to help you understand, okay, where's my cash, what's my profit, and are they both at a healthy position? Thanks for spending time with me today. If this episode gave you clarity or a new perspective, be sure to like, subscribe, and comment below. If you're ready to apply what we talked about today with real guidance and accountability, visit profitrei.com to schedule a free discovery call with us to create your path to financial clarity and freedom.